All right, so this video is going to be kind of multifaceted. I'm going to go over a few things. I'm going over some things that I see right now, and I'm going to go over some other things. Now, the first thing that I wanted to go over, I told you I was going to discuss divergences with you. So, there is a thing, well, it's actually called divergences and it's called convergences. And what it is divergences is when, let me change this to the weekly. Divergences is when two things are coming together or spreading apart, and convergence is when two things are coming together. So when you understand the difference between a divergence and a convergence, then it kind of tells a story. So we're going over divergences, and divergences are going to explain two things that are spreading apart. Now, we both know the MACD. We both know the relative strength index. So the relative strength index basically tells you the strength of the market. Um, when there's a lot of buying pressure or buying strength, then your relative strength index will go up. When there's a lot of selling strength, then your relative strength index will go down. Now with your MACD basically tells you the momentum of the market. Now, with the momentum of the market, it'll tell you how strong the momentum is versus when the market is losing momentum. Now, as I've gone through in some of my courses, whenever you have activity above this line over here, the zero line, then that means that your momentum is to the upside. Whenever you have activity below this line, the zero line, then that means your momentum is to the downside. So you can use this in combination with this to tell whether we're in an uptrend or downtrend. That tells the story. So, with that being said, if you look at the price of an asset and you see the price of an asset make a move, and then you see the price of an asset make another move. It oscillates. They go down and up. Now, in going down and up, you pay attention to two things. First of all, you pay attention to whether or not the price is increasing or decreasing on the second go up. Now, if the price is increasing on the second go up, you also can look at the MACD, and the MACD will tell you what was the strength or what was the momentum? What was the momentum of the price increasing for the first go up versus the momentum of the price increasing for the second go up? Same thing as with the RSI. What was the strength of the first time the price went up versus the strength of the second time that the price went up? Now, as you can see, and this is where divergence happens, as you can see, even though you had this area where the price went up and then it came back down and then the price went up again, and you can clearly, whether you're doing it from tops or whether you're doing it from bodies, candle bodies or whatever, you can clearly see that the price is higher. The price is higher on this second go up, but or the second increase. But if you look at the MACD, you'll see that the momentum wasn't there. So there was more momentum to get the price up at this point. And the second go around, there was less momentum. Now, in there being less momentum, that tells you that this right here is weaker. This oscillation, and I say oscillation because I believe oscillation is just going up and down, and that's what the price does in crypto. So this oscillation was strong. Like there was, from getting to this point was strong. There was a lot of momentum in it. But then when it came down and oscillated and it tried to go back up, there was less momentum. There was also less strength. Whenever you see a divergence, that's pretty much letting you know that the price is getting ready to either consolidate within a range or it's getting ready to go down. That's the case with divergences. So you always look for divergences. There are just certain things that you kind of always look for. Now, this was in the 2021 market. Now, if we go to now and we see the same thing, we see that there was a push to bring the price up to here. And then there was another push to bring the price up to here. Now, let me show you what would have worked or what would be fine or what to look for. Actually, let me show you what to look for. You see this push right here? Momentum pushed this price up, and then you had another, the next time the momentum wave came up in the MACD, it pushed the price up to here. So now, if I actually go from this top to this top, even though it's slight, you can see that it's higher. That's what you look for. You look for higher waves, equal or higher waves, whenever you're trying to get an idea of the direction of the market. And as long as you're getting equal or higher waves, that means that the momentum is there to continue to push the price up. But when we go from this wave to this wave, you'll see that this wave is actually lower than this wave. And then this wave being lower than this wave, then you have what's considered divergence. And you have a bullish divergence and you have a bearish divergence. This divergence, anytime that you see the price going up, but you see the MACD going down, or the MACD is not making higher highs. If the price is making higher highs, but the MACD is not making higher highs, then you have a bearish divergence. And your bearish divergence is basically saying that the price is getting ready to drop or it's going to trade sideways. Now your bullish divergence will be in a situation where you're getting lower lows in the price or whatever, but you're getting higher highs in the momentum. That means at some point, like, the price is getting ready to break and continue to go up. So let's say in this instance, you can go from here to here. And then if you go from here to about, what was it here? Oh, it's right here. And in most cases, and I brought it over, but in most cases, what it'll look like is you'll have your price action going down, but you'll have your MACD actually making higher highs. So that's going to be bullish divergence, and that kind of indicates that the price is going to start trading upwards. So when you find these different divergences on the candles, like, you'll be able to get an idea of what's about to happen. Even on the RSI, I like using the MACD, but even on the RSI, you can see that the strength, there was a lot of strength to get the price up to this level. And then there was not an equal amount, but it's over the 70. And anything over the 70 on the RSI shows like good strength. There was enough good strength to get this up to this next top. And now when it came to this third top right here, there wasn't a lot of strength. There wasn't enough strength to get it above the 70. So if there's not enough strength to break above the 70, then you usually have a breakdown. And that's what caused this to happen. So that's divergences. They're all over the candle. They're all over the chart. You can look at them. You could pretty much look at them and find them on whatever, like, time frame. Your bullish divergences and your bearish divergences, they help you for strategizing. I won't even say long-term trading. They help you for overall strategizing. So now, the one thing that I mentioned to you that I told you that I spoke about in the class was, I spoke about the moving averages, the 50 and the 70. The 20 to 50 and the 200. Now, what I mentioned in the class, and this has been on a weekly, I really been trying to, like, drill in on it here lately, is that whatever happens, Bitcoin cannot break below the 50. And this is the 50 moving average right here. And you'll see that I have 50. right there. I want to make this line a little bit thicker. But whatever happens, like Bitcoin has to trade above the 50 in order to continue to be bullish. Now, if we look at and let me hide, I'm actually going to hide the 20 and I'm going to hide the 200 for now. Now, if we look at Bitcoin from the bear market of 2022 all the way up until now, and this line right here is the 50, you'll see that as the price, once the price is above the 50, as the price appreciated, it goes down and it tests the 50, almost using it as a springboard or a launch pad. Goes up, comes across, tests the 50, bounces off of it, goes up, comes across, drop to test the 50 again, bounces off of it, and continues to go up. Now, in it continuing to go up, like we're fine as long as it continues to go up. But this particular time right here, and it was basically supported by a lot of volume, above average volume, we fell below the 50. We fell well below the 50. Now, the problem with that, is this first candle is fine for falling below the 50. This second candle is what's really important, because if the second candle cannot close back above the 50, then we are officially in a bear market, according to anyone that's watching. So there's a lot of people that's watching this last candle. So by this Saturday night or Sunday, whenever the market closes and we start a new week, a new candle, if this particular candle is not above this 50, then you're going to see continue capitulation. Well, the price is just going to continue to go down. Now, just to show you that this is not something that just is like that's new or that's being made up, here's the bull market cycle of 2021. And you can see the price was above the 50, went up, came down, it tested the 50, went up again, came down, and broke below the 50. Once it broke below the 50, there was a retest, basically a fake out that could not maintain or sustain because the volume wasn't there, and we fell below the 50 and ended up being in the bear market. Now, I will go all the way back to the bull market cycle of 2017, and you'll see here that the price went up, and then we bounced, playing around on the 50 until we finally broke below the 50. And once we broke below the 50, 50 became resistance, and then we fell into the bear. Not saying that the 50 is the top. Not even saying that 50 is anywhere near the top. But as long as we're above the 50, then we're still in the bull. We're still in the bull market cycle. But at the same time, you have to pay attention to the dates and times, because the dates and times will also give you an idea of when the market is coming to an end. So this market top was on December the 11th. So I'm going to mark that off as December the 11th. And then if we go over here and we check for this market top was November 8th. So we got a December, we got a November 8th, and then we're right here. But I believe there was one more. And I think this is it. So if I go here, I find this market top. This market top was November the 11th. So the cycle normally ends, so far what I'm gathering is the cycle normally ends within, like from what I've heard, the fourth quarter of a post-election year. So you're looking at 2024, 2028, I guess. 2014, 2028, 2018 or whatever. And in our case or whatever, or right here, 2022. And then in our case, it'll be it's actually 2025, the end of 2025. And these right here are the end of like 2021. Yeah, this is the end of 2021. This is the end of 2017. So if we mark the top as being here, and this was around the top, then we're at a September, which it actually, I don't think it was September. I think it was more, let's go over 1 week. We were more like October, which kind of lines up because you're in the October, November, October, November, December area, which is the fourth quarter, which is always the fourth quarter of of the post. I think it's post election year, so it's always the fourth quarter of the year after the president gets elected. Now I have to check to see if it's so many days after the halving, but it's you're always going to be like roughly 30 to 35 days off of the previous all-time high. So for people talking about January, February, March, or this thing running all the way into 2026, right now it doesn't make sense only because Bitcoin operates on a 4-year cycle, which is not anything that's made up. This is mathematical. This is written into the code. Like it's supposed to do this. It has halving years. Your halving years are going to be every 4 years or whatever, and being that your halving years are every 4 years, or your halvings are every 4 years, then there's a certain amount of time that Bitcoin runs or whatever, because it can't keep running up or whatever into a halving. So that's the one thing. One of the reasons why I am operating now is if we've already topped, and now with that being said, I'm paying very, very close attention to this candle because if this candle is able to close, if this candle is able to close above this line right here, and this is a weekly candle, if it's available to close or able to close above this line, then that means that it's still in a trend. But right now we've broken below the trend. And if you want to know what the trend is basically, and now I can hide the 50. The trend is basically like the trend line is what the price has been doing or whatever, basically since the beginning of the start of the bull market. So as long as it's above this line, this is pretty much a trend line, which is 2 touch points. Here's one touch point, and here's the other touch point. Here's the third touch point. So right now, if we can close above this, and this looks like around 89, maybe 88, 89, then we're still within this uptrend. Now, here's another thing about the top, and I mentioned it, but I didn't really go into detail about it in any of my classes that I can remember. But I did speak to a couple of. I feel like I spoke to one of the coaches, one or two of the coaches about it. This is the top of Bitcoin in 2018. So if you go from top to top, or basically top to what it went up to, you have a touch point. So you have touch point to touch point. Now you actually have a trend line, a resistance trend line. This is a support trend line. This is a resistance trend line. If you actually follow this resistance trend line all the way up, you'll see that this was the top. This was actually the top of the Bitcoin market cycle because we're in a channel, and within that channel, we tap the top 1, 2, 3, 4. We tapped the top 4 times and couldn't break it before we're coming down now. Now, if this is the bottom channel, then we can wick below it and come back above, and we can still kind of like chop around in this area before taking up again, if that's possible. But these are the things that don't get discussed, and this is why TA is so important. This is why learning your trend lines, your supports, and your resistances and things like that are so important. Because in watching these videos, like people will tell you what their thoughts are based on what they believe, but you gotta be able to pull it up, and it has to be able to make sense on these charts. Because like I say a lot, like these charts, none of this stuff is like random. Like all of these are just patterns playing out over and over and over again. And once you understand that these are patterns that are continuously playing out over and over again, then you know that you can go and look to this market. You can go and look to this market to get answers, and test what other people are telling you. Like, for instance, here, right here, you literally have a head and shoulders pattern. And in your head and shoulders pattern, which it should have been noticed, like the head should have been noticed. The first shoulder and the head should have been noticed around this two two I mean 108,000, and then this bump up for the second shoulder or whatever as it started turning. Then it's also something that should have been noticed. But you could take this head and shoulders pattern, and you could take the head and bring it down to the neckline, and then bringing it down to the neckline. Then you'll see that 90 90 was it was definitely breaking the neckline. We were definitely going to revisit 90. Now, of course, if you look for the last 3 days, especially today, there's been a lot of capitulation, which could be a good thing, just because this is the most volume. This is the most volume in a long time, since March. Like this week or today, actually, has been the most volume since March, which could be a good thing, because if it's a capitulation to that's going to turn into a hammer candle or make it flip, then that means we probably found a bottom and we can continue to move up. But until, and I'll pull this open, until and only until price is able to recover this 50 moving average, I don't see myself getting back into this market. So now I will speak about the 200. So the 200 is this red line, but it's so much red here that I'm going to change it to yellow so that you can see. Um, yeah, so that you can see the importance of it. So whenever we break below the 50, whenever we go into the bear market, the price action always, and I'm comfortable with saying always, it always means reverse or it goes back to the 200. So in the 2017 bull market cycle, or the 2017 cycle, 2017 cycle, you see when we broke the 50, we went back, and the 200 was that consolidating area where load up here, load up here, before it took off again. Even when we had the COVID crash and prices dropped, or whatever, you see they wicked again, but they ended up resting on the 200 before heading back up. So anything in this area of the 200 was load up zone. Now we go back here, and this is the last cycle. We had our moves, we had our drop below the 50, and the price was supposed to come and consolidate around the 200. But as you can see, on January the 13th, Monday, January the 13th, there was a huge drop. Now, I'm pretty sure you can pull up, let me see, crypto January 13th. If you pull up what happened in crypto on January 13th on Google, um, you will see that, let me see what was going on. There was a lot going on, but there was just this huge capitulation event where people just started to sell out. But the price was supposed to come back and consolidate at around the 200. Now, it didn't. And the reason why it didn't, because around this time is when we had the Three Arrows Capital and the Terra Luna and the Celsius. We had all of those companies that actually, and the FTX crash or whatever. We had all of those crypto exchanges crash and get liquidated, which knocked the price down way further below the 200 than it should have been. So anything purchased in this area or whatever is gold. Like, you, that's a come up. So anything that was bought in this area, you really benefited from, because this is buying in the 20s, 18s, 17s, even 16s. So if you bought in the 16s, right now, even with the price at 80,000 and you bought in the 16, you're still up at about 5x, 5x easily. So now, where we are is, this is the drop. If we're in a bear market, if we're really in a bear market, then this is the area that we are looking forward to enter. Now, this is not going to go straight down. This is going to happen over the course of some days. There's going to be some consolidation. There's going to be some retraces. Like, it's going to oscillate like it always does. Like, crypto doesn't go, none of the markets go straight down. They kind of oscillate. And as they oscillate, this will continue to come up. Now, in this coming up, in the 200 coming up, like, I feel like the 200 will probably get up to the 60, depending on how long it takes, maybe 65, 70 range. Now, in it getting up to the 70 range, if the price even comes down to the 70 range and consolidates, and like you load up on the 70 range, then that doesn't necessarily mean that there was market manipulation or whatever and we weren't in a bear market. Nah, that just means that we're in a bear, but it's not as severe of a bear as it's been in other cases. And the only reason why it's not as severe as a bear as it's been in other cases or whatever, because we did not have a huge run up. So in having a huge run up, you have to look at the percentage between the top and the 200. So the percentage between the top and the 200 back in 2021 was 73%. That's between the top and the 200. Now, if we go to the 2017 and you go from the percentage from the top to the 200, you're looking at like 92%. So that's why Bitcoin dropped the way that it did. Now, if you go here where we are now and you go from the Bitcoin top to the 200, you'll see we're about 55%. Now, that doesn't mean that it's going to go down 55%, because, as I said, as this is going down, this will also be coming up. But it just shows that we did not get that blow off top. We didn't get that euphoric moment to make the price go so high to where that it was, like, let's say 150 down to the 200. We're 64% now. If Bitcoin would have hit 200,000, like most people were wanting it to, and from 200,000 it decided to come back down to the 200 moving average, then we would see that around 70% like drawdown. But since we didn't get that, then our drawdown is not going to be as big or whatever. It's going to be shallow. So unless we get back over the 50, we're in a bear market. Regardless of what's being said, we're in a bear market. The benefit of this, though, is that we didn't get a blow off top, or the price didn't take off the way that people thought that it would take off. So it won't take that long to get back down to the 200. And by the time we get to the 200 should be within the 60, let me see, probably 60 to $70,000 range, which is fine for most people, because our crew got in at like 40, 30 and 40 or whatever. So if we were loading in at 30 and 40, even in it dropping back down to that 70 range, it's still not going back down to where we got in at. But yeah, those are my thoughts about what's going on with the market. And unless, like I said, unless I see something different, I am not getting back into the market, not longing into the market. I still will open short and long positions daily, but for the most part, unless I see something different, then I'm basically waiting for this price to turn around, correct, come back and try to break above the 50, which I don't think it can. And then at that point, I will liquidate the rest of my assets, and then I will start to open my short positions and ride it all the way back down to the 200 moving average, which is, like I said, is probably going to end up being around the 60, 65 to $70,000 range. So that's my position, and I basically have the indicators to kind of support my thinking. This is going down, the price is going down. So the MACD line has already crossed. Let me make sure the MACD line is blue. That's what I thought. So the MACD line has already crossed below the zero line. The signal line is going to follow the MACD line below the signal line. So right here is pretty much the cross. And when it comes to the RSI is still going down. The RSI is not going to be attractive to me until it's actually touching the 30, bouncing off the 30, kind of like in that area of the 30. Until then, like it may zigzag and move around and stuff like that, but I'm not going to really be concerned until it's around this 30 area or below. And when I actually see some of these histogram bars starting to turn this pinkish color, because that means that we're losing momentum on the sell side and starting to gain momentum on the buy side. But right now, in looking at the MACD, you can see we're not losing any momentum on the sell side. The momentum is building up on the sell side, which means there's more downward pressure to be expected. So yeah, this is going to keep moving. So in that, just kind of understand that, learn about your divergences. Get your support zones. It's cool if you learn Fibonacci or whatever, but definitely pay attention to your moving averages, pay attention to your MACD and your RSI. If you want to add any other like signals to that, that'll kind of help you. Then by all means do that, but just have a general overview of the direction of the chart. That's why I always start out weekly, and then I'll go to daily, because then daily will let me know what all I can do, what all I can get away with. Like I can go to daily and see on a daily time frame that we're overbought, and being that we're severely overbought, um, I will probably go down a little bit more because your MACD and the signal aren't pointing upwards in a direction yet, but we have this large capitulation candle and we have a potential, volume, and we have a potential hammer candle that can flip around and go back above this trend line. Like on the daily, all of that looks good, which means I expect soon for the price to come up and kind of try to like recover before falling over and continuing to go down. And the same thing goes with the 4 hour. I can look at it. I'm getting some pink bars. Um, the volume is still kind of high, but I have an overbought scenario right here. So now it is actually trying to come back up. Oh, excuse me. And you can see it where the price is turning around, but it's like now that the price is turning around, what do I expect the price to go? So on a 4 hour, I would expect the price to go to around 92, because that is where the 50 is. On a 4 hour, the 20 is still above. And let me make sure that's the 20. Nah, that's not the 20. Oh, wait a minute. It might be. Let me see. No, that's the 200. We're not going to worry about 200. So now, in this instance, sorry, got to go back. I expect a price reversal to go probably around to 88. And if 88 can break, which it seems like 88 hasn't been able to break because this is the first line of defense in a downtrend for resistance. If it can break the 88, then I expect for it to go up to 92. But if there is no volume to support it, and as you can see, like this had a lot of volume and it really just wicking like crazy. So there's still a lot of indecision here. But if this has the volume to support it, then I think that it can keep running or whatever. But if the volume is not there, then the price is pretty much just gonna bounce off of the 20 or the 50, and it's gonna roll over. So these are the things that I'm looking at, and like I said, you can break it down further and further and further, and kind of like get more information. But just keep in mind, just based on what the weekly said, we are officially in a bear market. Well, not officially, but if your weekly candle, this weekly candle closes below the 50, then if history is respected, then we're in a bear market, and we just have to be prepared for that, and prepare for the price to be able to drop down, knowing where it's going to drop down, and making sure that we have enough capital to be able to kind of like load up and benefit on that drop. Um, so that's the thing. Like I'm taking profits. I've been taking profits on the pullback up. I'm going to take more profits, and get out of more positions only because I know that without a sign of a continuation, then we are definitely going down to the 200. And when we get down to the 200, I want to have enough. I want to have enough to be able to load up and really, really run this bear market. Really, really get in on this bear market and run up in this bull, and see like some excellent numbers before we even hit a blow off top. But yeah, I want to say that's it for this video. I've been speaking for a while. 36 minutes is a while, but I wanted to explain what it was that I was seeing. I wanted to explain to you what divergences look like. I wanted to explain to you the moving averages, and I also wanted to explain to you like the trend lines, so that you could see like what it is that I'm looking at and what's kind of like leading in my decision making. But yeah, if you have any questions, feel free to hit me up. All right, peace.